Welcome to a new video of the swing trading series. What we will be doing as usual is performing a full breakdown in the market to show you guys what kind of swing trading opportunity we can be looking for on the pair that we will be analyzing. And obviously, this will also help you understand exactly what you have to be looking for when you're actually analyzing the market and scanning for opportunities. Now, if you're new to the channel, I'm a top author on the TradingView platform, and every single day I share a lot of free analysis and education on all my platforms. So I really do suggest that you subscribe to the channel so you won't miss out on all this free education, and I will see you in the video. The pair that I want to speak about today is GBPAUD, and there is a very specific reason for which I want to speak about this pair, because during this analysis you will learn a lot of very important concepts when it comes to multi-time frame analysis, order flow, and in general how you're supposed to be approaching the market. And you will also see what kind of opportunity we can be looking for on GBPAUD in the future to obviously be capitalizing on the move. Now, what we will be doing in analysis is, as usual, starting from the monthly, weekly, and daily time frames, checking what we have from a technical perspective in the market. We will then go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are currently doing in the market. And obviously, by using the combination of these two, we will be looking for a nice trading opportunity. Now, why do we check the order flow in the first place? Because if you're looking what hedge funds are doing in the market, you're able to position yourselves with market makers, and basically you are able to follow the smart money in the market and trade against retail traders. So let's make a full breakdown. Let's start from the monthly time frame. Now, on the monthly time frame, there are three very important things that we have to say. The first thing that we can clearly see is that the market has created a very strong impulse. Now, when you see an impulse in the market, what do you expect? You expect the market to give you a retracement. Specifically, you would like to see the market create a retracement at least to the 0.382 of the Fibonacci taken on the impulse, which in this case gives us a first upside target at this 0.382 Fibonacci retracement of this fib taken on the impulse. What we can also see on the monthly is that the market has currently approached a very important demand area for this market. In fact, from here the market has started all this move to the upside. So there is very strong demand here, and currently the market has already tested twice this very important demand, and both times it got rejected to the upside. And the third thing that we can see is that the market has created this candle here. Now, in general, when you see a candle like this, which has a red body and a long wick, which is at least long as much as the body, what you expect for the next candle is to see the market fill in this wick. This is a pattern that you will see very often in the market. So we have two confluence factors for a longing situation, for a deeper retracement and rejection of this monthly demand, and one confluence factor for a move to the downside, one indication for a move to the downside for the filling in of this wick and the completion of the pattern. That is what we have from a monthly perspective. Let's go down on the weekly. Now, on the weekly, what we can see? On the weekly, we can see one very important thing. The market is currently testing a strong supply area from which we can expect the market to find resistance and get rejected to the downside. In fact, before starting this huge impulse to the downside with this red candle, the market, the last time that it went to the upside, it was with this green candle here. So we have previous support, which is now turned resistance at this area from a weekly perspective. And until the market will remain below this area, we will have a resistance on the weekly. So putting together what we have just seen on the monthly and on the weekly time frame, what we can identify is that yes, we do have strong support from a monthly perspective across this region, and the market has already respected it. However, we also have strong resistance from a weekly perspective at this area. So the market is currently trapped in between weekly resistance and monthly support, which is definitely not a very good situation in which we can find ourselves. That is why I wanted to make this analysis, because it is very educational. Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. Going down on the daily, what do we see? Now, from a daily perspective, if you remember, we spoke about GBPAUD a few days ago. We spoke about GBPAUD specifically when the market was here. And what did I say in this previous analysis? I explained all the reasons for which from here we wanted to see this move to the downside. The move to the downside that the market just created, completing the pattern exactly as we wanted to say. In fact, as we wanted to see. In fact, what did I say? I said that the market needed to complete this W formation at this neckline, which is exactly what the market did with this nice swing to the downside. Now, I will link in description this previous analysis in which I explain all the reasons for which from here we wanted to see this move to the downside. So you can go and check it out for further reference and more free education. You find it linked in description, and it is a full YouTube video. You can go and check it out. The link is in description. But what is the next opportunity for this market? Now, as I have already identified, on the weekly, we have resistance. On the monthly, we have support. And on the daily, the market is simply trapped in between these two levels. So how we can be looking for an opportunity on GBPAUD? Well, the market can easily provide an opportunity if it will break below this structure. As you know, I made a lot of videos about this. If you have a market that is currently trapped in a range, the best opportunities are W and M formations that have completion zones at the top or bottom of the range. So if the market will create a move to the downside, we will have a beautiful M formation from which we can be looking for a nice opportunity. And how we will be approaching this kind of opportunity with students. Now, before I show you this, let's first go and give a quick check at what we have from a COT perspective on the pound and on the AUD. Now, from a pound perspective, what we can see now on the pound, we can see that net positions with the last reports went from 12K to minus 12K. What does it mean? It means that institutions went from having way more longs than shorts, with 46K longs and 33K shorts, to a situation where we currently have the complete opposite. We have 51K shorts and 39K longs. So definitely that is not good, because it means that the pound is very bearish. And at the same time, if we go and see what we have from an AUD perspective, we can see that also the AUD is very weak. In fact, we went from 16 to 8.9K net positions, so cut in half, with 500 shorts getting added with the last report and 6.8K longs getting closed. So now it is pretty clear why the market is ranging, because both the pound and the AUD are weak. So if you have a weak currency against a weak currency, obviously the market will range. On the other side, if you have a strong currency against a weak one, you will have an uptrend. If you have a weak currency against a strong one, you will have a downtrend. In this case, if they're both weak or both strong, in this case they're both weak, you will have a ranging market, which is the reason for which you see monthly support and weekly resistance, and the market is currently trapped inside of the range. So that the situation is obviously more clear. Now, if the market will make this move to the downside, we will have an M formation that has the completion zone at the support. And what we will be doing during this move to the downside with students is, as usual, looking for an opportunity. Specifically, after, as you know, if you have in M formation, you expect the completion at the neckline. In this case, the neckline is here. So during this move to the downside, what we will be doing with students is monitoring price action from a 4-hour perspective. Why we will be monitoring this move to the downside from a 4-hour perspective? Because as usual, monthly, weekly, and daily are the best time frames when it comes to the direction of the market. But the best time frame for confirmations and entry is the 4 hours. So during this move to the downside, we will be monitoring price action from a 4-hour perspective, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities for the completion of this M formation at the neckline, aka the previous support, which is now turn resistance, to complete the pattern and give us a nice opportunity to the upside. On the other side, to the upside in this case, after the move to the downside, obviously. Now, if from here the market will just break to the upside, then we have to adjust our analysis. Because if on the weekly we will see the market create a weekly break above the area, then at that point the monthly, weekly, and daily time frames are all showing for a nice long opportunity. We will see hedge funds open longs on the pound and close their shorts. on the AUD, and we will see a beautiful move to the upside. But if that will happen, I will try to keep you guys updated also here. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. You first learn all the rules of my rule-based strategies in the program, and then you trade them live with me. Each and every day you get a new daily market breakdown showing you exactly how to apply the strategies with entry, stops, and take profits, as well as having me answering personally every question that you have every single day. So I really suggest you go and check out the program. The link is in the description, and I will see you in.